Hello everyone. Well, we had a really interesting day yesterday. The ECB's 25 basis point rate cut was as expected. The big surprise was that ECB President Draghi said the ECB is open to a negative deposit rate, which could feed through to negative retail deposit rates too, like in Switzerland. He didn't have anything to offer in the line of unconventional measures though, such as help for the asset-backed securities market. In other words, the ECB is willing to loosen policy further, which is negative for the euro, but they're not willing to take any measures that might actually fix the problems the Eurozone credit creation system faces, which is also negative for the euro. At the same time, the economic news was dollar supportive. While the Eurozone final PMIs were revised up slightly, markets said they were still bad enough to raise the risk of a deepening contraction in GDP in the second quarter. On the other hand, the U.S. jobless claims fell to the lowest level since 2008, which was seen as a very encouraging sign. The significant thing for the markets was that, for once, good news for the U.S. was good news for the dollar, too. The dollar rose even though risk sentiment came back and stocks were up and commodities were up, and despite lower Treasury yields and a fall in expectations for Fed funds. So this is what I want to stress today. Perhaps the seriousness of the economic problems in the Eurozone and the likely course of monetary policy in response to those problems have caused the euro to decouple from the risk-on, risk-off trade. Now, we've seen this correlation loosen before, though, so I'll wait to see how the next few days go. But this makes me think we may have seen the peak for euro-dollar for some time, barring, of course, some disastrous U.S. figures. And that brings me to today's U.S. non-farm payrolls for April. The consensus estimate on Bloomberg is up 140,000, which is versus up 88,000 in March, with the unemployment rate expected to stay unchanged at 7.6%. But most of those estimates were made before Wednesday's disappointing ADP figure. So the real consensus is probably somewhat lower. In any event, predicting the market's reaction to the data is as hard as predicting the data itself. We looked at the last 6 times the non-farm payrolls beat estimates, and the last 6 times it came in under estimates. On average, there was little or no change for the first 3 days or so after the announcement, and then euro-dollar started falling when the non-farm payrolls missed estimates and rose when the number exceeded estimates. In other words, on average, a better than expected non-farm payrolls number has been worse for the dollar in the week after the numbers are announced. Be careful though, because the average hides a wide dispersion of results, making it difficult to say with any certainty what the impact is likely to be. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.